Hello there. Is there going to be a Bitcoin crash ahead? Is there going to be a Bitcoin crash ahead? Apparently, no. Personally, if you know me, you kind of know the answer already, right? If you watch my videos, and I know you, then you know that it's really all down to the VEPs. Is there going to be a Bitcoin crash ahead? Well, what do you mean by crash? What time frame are we speaking of? Relative to what? What do you think just because it's gone up for the past several days that we'll have to descend into nothingness forever? That seems rather unlikely and highly improbable based on the VEPs. If you're wondering what the VEPs are, again, it's the volatility, entropy, probability, and statistics. Why should you think that an asset that has risen from 0 to over 70,000 in the first 12 years of its existence, and then down to 15 and back up to, what is it, like 48 now? Why should it go to 0 permanently at this stage in its life, only 15 years in, while it still has plenty of mojo left, if you look at the VEPs? And the answer is, well, it shouldn't. Is there a probability somewhere that may exist that it could happen? Sure. The sun could explode and engulf the planet and destroy us all, and therefore it'd be irrelevant. It's a possibility. Not likely to happen in this lifetime. Billions of years from now, it's probable. But now, no. So why does YouTube Jimmy get up and say, oh no, Bitcoin's going to crash now? Well, what do they mean by crash? Why are they using that clickbait? Why did I put it in my title? Well, I put it in my title because if I don't put that in my title, then it's not really relevant to what I'm talking about. And also, it doesn't really matter what I put in my title. No one's going to see this video anyway. But I put it in there so that if you saw it in there and you've been watching YouTube Jimmy videos, then you would get a different perspective. It isn't a YouTube Jimmy perspective. What is a YouTube Jimmy? A YouTube Jimmy is one of these fake gurus on YouTube that tell you about how to trade using technical analysis. And they mean traditional technical analysis, which are the garbage lagging indicators that I've spoken to you about. Right? So YouTube Jimmy is constantly shilling affiliate links, exchange links, whatever. He's always shilling links to his courses, his expensive indicators, etc. Cares about your dollar, your clicks. Doesn't care about you actually learning something of value. Unlike here, where I talk about things that you can actually use that are actually of value, because that's what I like to share. Right? And the fact that nobody sees it, and yet I still keep making the videos, is kind of demonstrative of what I mean. Right? So, when you consider what exactly they mean by, oh, Bitcoin's going to crash, after it has risen, let's say on the 4-hour time frame or the daily time frame, it's gone up about 12, 14%, something like that, since last Wednesday. And it went up from 42 to 48. Well, suddenly it has to go down, right? No, it doesn't suddenly have to go down. It's all about the probabilities, the distribution, the mean reversion, right? If you got an asset that's riding outliers for a very long time, and it's breaking fat tail outliers on the returns. And if it's in a trending move on entropy, and that trending move is correlated in the direction it's been going, and that correlation has been increasing, and all these things have been maxing out, eventually they're going to start to stop maxing out. And there's going to be some kind of mean reversion. Why? Well, because the returns have moved very far away from the mean. So eventually they will revert to the mean. Why? Because that's how you get balance in the market. Right? So for a while, the buyers have been running up the price, and the sellers have not been driving down the price. They've been selling on the way up, right? To buyers. And that's led the volatility to drive the returns to the upside, and therefore the price action follows to the upside. And also the entropy has been running to the upside on the 4-hour time frame. You can see it very beautifully. It was in a trending move very nicely since Wednesday. And on Friday is when the daily candle started being a trending move, and it ran through the weekend very nicely. And you can say, yeah, but yesterday, Sunday, it was already going sideways and even arguably a little bit down. Yeah, you could say that. But that is neither here nor there about what the VEPs are telling you right this instance whenever you look at your charts. And you see what the actual market is actually telling you about what is happening now and probably going to happen in the future on the next candle. Because that's what the VEPs tools do. That is the whole point. Right? People always say, oh, if only I knew what would happen in the future. If only I knew now what I knew then. Or if only I knew then what I know now, is really what they mean. Meaning, if only I knew something about the future, then I'd be infinitely rich. Because I'd put all my eggs in this basket and I'd be super rich. Well, that's not how that happens. Because you don't really have the ability in all walks of your life to see into the future, right? When you're crossing the street, you don't actually know necessarily what's going to happen. You may think you know, but there's always surprises, right? When you're driving down the road, you don't necessarily know what's going to happen between where you are and where you're going to. Right? Surprises happen. So, for anyone to tell me that they know all things like a crystal ball, I can just tell them, well, then obviously that's nonsense. But if someone says to me, using highly relevant maths, I have a very high probability of predicting certain things about things like the returns and the means in the future, I will tell you, yes, that is highly probable. In fact, I know it is, because we have such a tool available at Alpha Trading that can tell you the future return, the future reverse mean of log returns, or specifically the direction of it, not just the future of it, the direction of it. And what does that mean? That means that we can look at an asset, we know where the mean is, we know where the reverse mean is, we know where the standard deviations are, we know where the Laplace distributions are, we know where the entropy is, You know all these things about it. Much more. Let me tell you where the future reverse mean of log returns is heading. Up, down, or sideways. Not just for one candle. We can look thousands of candles into the future. But practically speaking, I can look 10, 20, 30 candles into the future with ease, and I can even just as easily look thousands. But on a practical sense, I'm more likely to be interested in what's happening in the next 10 to 30 candles than I am in thousands. But if I want to get a bigger picture view, just to understand what is likely to happen thousands of candles from now, yeah, I could do that too. Can you also look into the future? But you can with the RMLR. I want to say look into the future. I don't mean like with 50-50 chance of being right, or a 60-40 chance of being right, or a 75% chance of being right. No. I'm talking about being right more than 99% of the time. In fact, far more than that. Well beyond 99.7% of the time. On most assets, any amount of decent liquidity in history, even tiny assets that have barely any liquidity, doesn't really matter. Of course, the ones that have barely any liquidity are more subject to having their prices yanked around like a rag doll far more than much bigger assets because of the size of the bag required to move around a small asset versus a large asset. So that only makes sense. But nevertheless, you can, by any means you calculate, see the future direction of the reverse means of log returns with the RMLR indicator. Again, why does that matter? Why do you care if you're a trader? If you can see the future RMLR? Well, I would argue that you care about that because the future RMLR tells you exactly something very specific and tradable about the asset. And what is that? Well, the future RMLR tells you very likely it works together with the returns in the price action. I mean, distribution models, and you can see on it very clearly when the asset is at the RMLR, moving away from the RMLR, at an extreme point away from the RMLR, or mean reverting to the RMLR. Because that's all assets do, right? They move away from returns and they mean revert. They move away from the mean of returns and then they mean revert to the mean of returns. Why? Well, because of volatility. Right? There will be a balance that will be found at some point between the ask and bid, or the prices of buyers and sellers. That little delta, the difference between the ask and the bid, is that volatility. That standard deviation of the log return on investments, otherwise known as the standard deviation of returns, that is volatility. that spread of data around the mean, also known as variance. That is volatility. Which again is kind of why it's funny when, as I mentioned in the previous video, when news people talk about how volatility is back, they have no idea what they're talking about. Volatility was always around, will always be around. Now, you could argue that on certain time frames, there's been relatively low volatility for certain assets for a while, and that there's more volatility now. Yeah, but I could just as easily show you plenty of assets where the opposite is true. Where there was a lot of volatility some time ago, when there was no volatility in other assets, and very little relatively on higher time frames, whatever, and that now there is none to speak of on the higher time frames. But still, on the lower time frames of those assets where there appears to be no volatility on the higher time frames, there's still plenty of volatility for intraday trading. Otherwise, there wouldn't be intraday trading happening on the asset. And how do you know this? Well, look at how much of that asset has been traded in 24 hours. You can tell. The volume doesn't tell you anything about the price or the future or anything like that. It's just noise. But if you want to know how much people are trading it, people are trading it. Okay, well, bots really are trading most things. So how much is a bot trading any random asset? Go have a look. You can see. You can see how many orders have been run. You can see how many shares or coins or whatever have been run, ordered, bought, and sold. And I'll give you a sense of an idea. Again, don't look at volume. Right? Look at the order books. You can look at volume, but it's not going to tell you anything of use for trading. If you want to look at it just to know what is the volume of trades, are there a lot of trades happening? Okay, great. Yeah, there's a lot of trades happening. That doesn't tell you anything about the direction of the price. Don't use volume for trading. If you want to know what the volume is of something, sure, go look at it. It really won't help you. But it'll just tell you, whether or not there's a lot of trading happening on that asset relative to its own data set. So if you want to see across different assets, of course you need to compare them. Historical comparison, daily comparison, whatever. You gotta look at all the different relevant comparisons, number of shares or coins or whatever available. There's a whole host of things you have to look at, not just one thing. Anyway, so bear that in mind, and don't get fooled. Don't get fooled by them that don't know. There's a lot of them that don't know is around. And most of them don't have anything like the RMLR, which can literally show you when to enter a trade, when to get out of a trade, what type of trade it is. Is it a move that's moving away from the returns of the mean of the returns, or is it a move that's mean reverting to the mean of returns? Okay. For example, that's one type of very useful information it can give you that you can use. Is it more than probable to move a certain way than another? That's something else you can tell with the RMLR. It has a very powerful set of information that it makes available to you. I highly recommend using it if you trade the VEPs. Of course, if you don't trade the VEPs, you don't trade at all, then it doesn't matter. But if you want to know if Bitcoin is going to crash, well, look at the relevant time frame you're thinking about. Look at it with the right tools. Understand how to read those tools. Understand that leading information is far superior to lagging information, as long as the leading information is accurate and gives you relevant information. And you know who does that? Do you have any idea who offers that to you? Alpha Trading. They literally provide, I say they, full transparency, I am one of the co-founders. Alpha Trading provides the best tools available to retail traders, because we literally give you tools that you can use to learn to trade volatility, and you can actually use the Alpha Trading tools to actually trade, even the free ones. People do. Tools, free chart, free live streams, free discussions in the Discord. Right? You can join the live stream too. Like, you can ask questions in it, you can speak in it. It's not a one-way, top-down kind of thing. It ain't no YouTube Jimmy channel. It's an open discussion forum. And yeah, we tend to, go through certain assets that people typically trade, including ourselves. But anyone can ask questions about practically any asset or indicator that we make and that we offer. Because we want people to learn how to trade better. And we don't care if you buy our indicators or not. Use the free ones forever. Good on you. Like, we have zero issue with that. We're not in it to sell you indicators. We trade because we're traders. We trade because we like to trade. If we wanted to have a huge YouTube channel, then we would do the things necessary to do that. If we wanted to have, many sales of indicators, then we would do what we have to do that. I mean, the fact is, the less people that even know about this, the better for us. Because we have a quantitative edge and a qualitative edge over anyone who doesn't use similar tools. So, if you never find out about this, you decide to trade with garbage indicators, thank you. We have an advantage that you don't even know about. But we are tired of seeing good people get wrecked. And it's not like if 10,000 people would use our tools, the whole market would change. There are millions of traders. Millions on any given day. If there was 10,000 people or even 100,000 people or even 1 million people using our tools, and the overwhelming majority of them would probably use them improperly based on statistics, it wouldn't affect a damn thing, right? In terms of the ability of these tools to be useful. Why? Well, how can I be confident in that? Well, because I can tell you that most people who get access to these tools can't be bothered to actually learn them. You might think, wait, you're handing out a pot of gold and all I have to do is learn how to use it and the pot of gold is mine? And I can tell you yes. And I will also tell you there's a high probability you won't actually learn how to use them. Or you'll try, and then when you see that you run into a challenge or hurdle or whatever, you're going to panic and run back to your old ways of losing money with lagging indicators rather than learning properly. You're not going to put in the time. The riches of the world are yours to have. All you have to do is reach out and grab them. But you need to learn how to do it. And most people aren't willing to do that. When I say most people, I mean the overwhelming majority of people. Even the ones who bothered to find, by looking for something different in the trading world, something possibly better than traditional TA. And they found it. And they've heard us tell them this. And they've seen us use it in front of their face. And they've used it for themselves. And we've held their hand. And we've shown them exactly what to do in what situation. And we've taught them when to enter, when to exit, what to look for, what the tendencies are. We give away a tendency cheat sheet. All you have to know is those 6 rules, tendencies, on the tendency cheat sheet. And it works for volatility and entropy. And when you have those two things working together, that's super powerful. And still, people do not learn. When I say people, I mean, more than 95% do not actually learn. Why is that? Because people are creatures of habit. They don't like change. It freaks them out. And something you won't hear very often, which is very true in the world of trading. People are masochists. Okay? People are masochists. By and large, the average trader in the retail space is a masochist. How do I know that? Because only a masochist would repeatedly enter losing trades, exit losing trades, lose money over and over again, feel that pain over and over again until they're literally wrecked, liquidated, out of capital to trade, broke. Only a masochist. Or somebody who doesn't have any consideration for money because they have all the money they could possibly dream about. Maybe they're child of some wealthy oil executive or who knows what. But the average trader, without a doubt, is a masochist. You argue with me all you want. That's just true. Statistically, there's no reason for most people to trade with garbage information and to constantly lose money using lagging indicators. The only reason they do it is because they like that pain more than they like success. Otherwise, they would stop the pain by stopping to trade. They would reevaluate what they're doing, and they'd consider whether or not they want to go forward. And if they do want to go forward, they would most certainly look for a better way to trade. Just like they would in any other endeavor that they're actually interested in excelling at. Well, what can they find a better way to trade? Alpha trading. So that's all I've got for you today right now. I wish you all happy trading.